Okay, guys. So we have been on this boot camp for 14 days now, right? So we're left with 8 days, and I want to really thank you guys for plugging in, especially listening to someone for 14 days. That's 2 weeks now. It's not an easy feat, right? I know that we all have something else to be doing, right? But you chose to come here, to watch these videos. When you watch these videos, you're actually helping the channel grow, right? When you like, you comment, these are the ways you're helping the channel grow. I think since we started this boot camp, we have gotten about 80 new subscribers, right? Within 2 weeks, we have gotten about 80 new subscribers. Well, this wouldn't have been possible if not your support. Some of you guys are sharing the links, some of you guys are commenting, some of you guys are screenshotting and posting on your social media accounts. And I want to really thank you guys for the support, because having 80 followers, 80 new subscribers in a matter of just 2 weeks, is really a lot. 80 new people joined us, right? I want to really thank you guys, and I hope that I didn't waste your time, right? So let's go straight to the points for today. Today we have been talking about liquidity, structure, and all of this fun stuff, right? But for today we'll be talking about determining daily bias, right? There's also an issue with a lot of traders. Their issue is that what is today's direction? What will the market do today? Right? That's how you make money, especially if you're intraday trader, right? You want to know what the daily bias is. What is the bias of today's candle? Right? Is the market going to go up or is it going to go down? How should I trade today? Because when the market is bullish, right? The market gives what we call a retracing leg, right? So this market, although the market is bullish, you see the market doing what? Creating what? This retracement, right? So if you are buying during the retracement, you are going to get stopped out, even though the market is bullish. Understand that. Even though the market is bullish, if you buy when the market is retracing, you are still going to do what? Encounter some losses. So it is essential that you understand the daily bias so that you're able to navigate the market at the right time opportunities, right? One thing about the market is that time is very important. You have to time the market when the market is about to go your intended direction. If you want to buy a bullish market and it's currently retracing, your timing is wrong, although it is bullish, right? But the right time to buy the market is when what? The market is ready to do what? To push what? To the upside, right? That is the right time to buy this market. So you have to be very, very subtle to know when the market wants to turn. So your problem, a problem a lot of you is that a lot of you don't know when to expect the market to turn, right? So that is why we're having this situation today. Now, the purpose of daily bias is to give you a picture or an idea that the market is supposed to be going in this overall direction, or it's supposed to go here today. Okay, we are expecting the market to be bullish for today. We are expecting the market to be bearish for today. That is basically what daily bias means. You want to know what the market is going to do for today, right? So that is the purpose. And then I want to also state something, right? I want to say, even if there is no 100% way of, there's no 100% system where you get it correct all the time, right? So 100% system doesn't exist, right? It doesn't exist. Just have it at the back of your mind. No matter how you know the daily bias, you can still be wrong, right? Even if you're very accurate, 80%, you cannot just be 100% accurate, because the market comes with a lot of surprises. Sometimes the market tends to do what you did not expect, right? So in those times where the market gives those unexpected movements, or maybe there's a fundamental event which you did not see coming, all of those fun stuff, right? You have to learn that those things would cause losses at some point, right? But what makes you a profitable trader is being able to manage your risk, right? So that when you have a loss, you lose less, and when you have a win, you win more, right? Imagine that you're winning $1,000 per win, and you're losing $100 per loss. So 1,000 is for your win, while 100 is for your loss. So even if you take 3 losses and win 1 win, you see that it was net profitable. So you should focus more on your risk management, right? Don't try to focus on 100% system, because it doesn't exist, right? It doesn't exist, right? So that is by the way. So now, what are the keys for determining daily bias, right? There are about 3 keys of determining daily bias. Number one, we want to know what is the trend in the market, right? Overall trend. Is the market supposed to be going bullish, or is it supposed to be going bearish, right? We want to know where is the draw in liquidity, right? These are 3 things that you really pay attention to when you're trying to know the market direction. Where is the draw on liquidity, right? Number 3, where is the imbalance? So we want to answer these 3 questions. Where is the fair value gap or imbalance I need to be balanced, right? These are the 3 essentials to determining what the market was current direction, right? Where is the draw on liquidity, right? Where is the imbalance? Where is the market going to draw to, right? So now these are the 3 things that really helps to know that the market is supposed to go bullish or bearish, right? I think yesterday, my private students were having a discussion. Although I won't be showing you guys the discussion, I will just kind of summarize what we talked about. So yesterday, I was telling them something in the paid mentorship group, right? Yesterday, so I was talking to my paid students yesterday, and they were trying to buy US 30, right? If you're my paid students, you cannot type in the group because I don't want to share the group, because if I share the group, there's no way I won't show some sensitive information, right? Which I don't want the public to know, right? These are paid mentorship student stuff, right? So if you're in a paid group, just confirm I said this. Now, one of my students was, he was trying to buy US 30, right? And then I told him that I was not going to buy, because why? Market took out this liquidity, the high of this candle, and the target was the low of this candle, right? That was yesterday. I told him that he wasn't going to buy because the draw liquidity, the upside was taken, and then the target was the downside. And I told you guys in one of the teachings where I taught you guys about um daily range, right? That is a daily range, right? I told you guys that whenever the high of the candle is taken, so they build a large candle like this, you can expect what market to run to the low. Because the market goes from what? The market is like a ball, right? Market bounces from buy side liquidity to sell side liquidity to buy side liquidity to sell side liquidity. This is how the market moves. It's always looking for what? One area of liquidity to the other. So if it takes out the buy side, this is how the market actually moves. The market moves like this. When it takes out buy side liquidity, what is it going for next? It's going for what? Sell side liquidity. When it takes out sell side liquidity, what is it going for again? The market is going for what? Buy side. If you take out buy side liquidity, what do you expect? The market should do what? Go for what? This sell side. So the market is always bouncing from one area of liquidity was to the other, right? That's how the market is engineered to move. The market has taken out what buy side liquidity. We push this high, and then we were inside was an imbalance. Where is the imbalance? It was right there. So we had a reason why the market should go bearish, because we are rejecting from an imbalance, and then we have pushed towards the buy side liquidity. So what remains was to go for the sell side, because we are coming from this imbalance, this area of interest, and then we have pushed towards buy side liquidity. That means what we should go for what sell side, right? That is how we determine what the daily bias, right? So I was able to tell my students that market should go for the low of this candle. I can see how it's delivered perfectly. So if you're a paid student, please comment in the group, in the comment section that I actually talk about this. Please, if you're a paid student, just type he said so about US 30, right? Just type it, right? If you are in my paid group and you were there when I talked about this yesterday, right? Just let the public know what they're missing, right? So these are the things that you miss when you're not in the paid group, right? Although I'm not trying to force you guys to join, but my paid group is the group where I feel obligated to share my insights on real time, to give them information that the public does not know. So that is just one of the perks of being in the paid group, right? That is why there's no how that people will commit their money to me and I won't give them more value, right? When some people commit their money to you, like they give their financial commitment, you have to give them what more value than those that are not committed to you financially, right? So that's one of the perks of being a paid student. You get to see all these things beforehand. I tell you what I expect. I guide you personally, and that is it. So my paid students got this alert, but I didn't post anywhere apart from my paid group, right? So that's just it. So that's by the way. If you feel like joining our paid group, you can always use the link in the description, right? If you want to join my paid group, just use the link in the description to join the paid group. It's just a very minimal fee, a minimal annual fee. If you want to join, it's not by force. I'm not forcing you to join. If you feel like you want to join us and you have all this insight, all this direct guidance, then you can use the link in the description, right? So now, let us see this as an example. So daily bias. Remember what I told you guys? You have to know what the trend, the draw liquidity, where is the imbalance. So you can see how the trend on this market was bearish, right? We took out this buy side liquidity here, and then we're going for sell side, right? And what do we see? We hit this buy side liquidity, and then we should drop for this low. If you ask me, the actual target for this market is what? This low here, right? So I will actually be targeting this low here, right? That's actually what I'm targeting for overall sales. So I'm targeting this low, right? But may not happen anytime soon, but that's what I'm targeting. If I was to sell this, targeting this low, because remember I told you guys it bounces from what? Buy side liquidity to what? Sell side liquidity. So we have taken out what? Buy side by going what? Above this high. So most likely we should take out this low before doing what? Resuming our buy opportunities, right? So, but it doesn't have to. It doesn't have to. Right? It doesn't have to do that. I'm just giving my speculation. And remember that everything I say yes was for educational purposes. I'm not giving you guys three signals, right? I'm just giving you guys education. That is all, right? So now, if you look at this market very carefully, you can see that we took out what buy side liquidity, and then this was the target, and then we're coming for this imbalance, right? This imbalance acts as what a key level or a resistance to price. So you can see how the daily bias was bearish because we took out what buy side liquidity, and we're coming from what a bearish what imbalance, which was to send price was down. So that is one of the ways you can determine daily bias. You want to know where the draw liquidity is, where is the imbalance, right? So an imbalance acts in two ways. Imbalance acts as what a resistance or a magnet. This is how imbalance acts. An imbalance acts as what? Type it in the comment section. Just type this in the comment section. Right? An imbalance acts as a resistance or a magnet. Right? It acts as a resistance or a magnet. So when the market is coming from an imbalance, when the market bounces on an imbalance, it acts as what? A what? A resistance to price. So when price is coming to an imbalance, it acts as a resistance. Meanwhile, it acts as a magnet when price has not gotten to the imbalance. For instance, now, there's a trade I caught yesterday on the lower time frame. That was on US30. Let me show you guys the trade I caught on US30. That was yesterday, or sorry, day before yesterday, 2 days ago. Right? I posted the group on my social media handle. Right? Where is the trade again? It was on US30, I believe. Yeah, I see it. So this was the trade I caught on US30. That was on this was on Wednesday, yeah, 2 days ago. I'm sure I'm correct. So what do we have here? This is 5 minute charts. So what do we have here? Oh yeah, this is 5 minutes. You guys understand what I'm talking about. I won't explain the higher time frame reason, but I want to show you guys why I actually trade. I just on the lower time frame, right? Watch this. Number one, we blew out what the London high. We took a London high. Where's London high? It's London high here. How did I make this bigger? All right, so we took a London high with that candle. So we took out this London high, all these highs here. This is London high. So we took out all the London highs, and then what we got to this red line means New York Q zone, right? This red is New York, while the blue is London. So we are above London high, right? And then we had was a break, was this other block was printed. You can see how this other block took out liquidity and then was broke the downside. So it was kind of market structure break here. This low was broken. This low was broken. You can see high, low, high. So this low was broken, and then we had what this little imbalance inside. You can see this little imbalance inside there. And then what do we have here? We had this big imbalance on the downside. Look at this big imbalance here. My pay students know I took this trade as well. So if you also saw that, just type it in the comment section. I took this. You can see this big imbalance here. So I was selling here. Targeting was this imbalance as was my draw on liquidity. Understand that? I was selling here and expecting this big imbalance to act as what? A magnet, right? I was expecting the imbalance to act as a magnet. That was why I was selling and targeting here as my take profits. I can see how price came. You can see how it acted a bit as a resistance by pushing price back up and then was falling woefully. So I sold inside this other block here. I was targeting was this imbalance high as my magnet. So imbalances act as what? A liquidity magnet. Price likes to draw to imbalances, right, before rejecting, right? That's how price moves. It likes to go for imbalances before was rejected. So if you're having you're confused about why price is going, I'll simply look at where the liquidity is, where imbalances. Can you see how price was bearish on EU? You can see how price bought from here all the way towards to tap into this imbalance. So if maybe you saw price down here, notice something. I actually was bullish here. Notice how price took our liquidity, right? As price took our liquidity, what did you expect? Markets bounces from what? One liquidity point to the other. So as price bounced off this liquidity point, what do you expect? The market should do what? Should go for what? Firstly, market should go for what? Remember what I told you guys? The high of this candle should be the first target. So the high of this candle should be the first target because price took out is low. So the high of the candle should be the first target. Remember what I told you? Remember, price bounces from what? One liquidity point to the next. Up, down, up, down. So took out what? The sensor liquidity. What should happen? Price should go what? This high. No, this high first, and then this one. But this one is what I'm taking because price took out the low of this. But this low of this kind of wasn't taken out. So I'm paying attention to this one because price took out the low and then took out this liquidity point here. And not only that, it tapped into what this other block. So you can see this other block that was tapped into here. Other block. You can see this imbalance inside there. So market, and all of those forms, right? So this you can see other block that was tapped into inside here. So price should go for this high. And then what do we have here? We have what? This imbalance, this big imbalance here. Can you see how price drew all the way to this imbalance? So when I saw this, I was buying EU. Ask my pay students. I bought EU all the way down here. I bought EU very much. I bought EU a lot. I bought EU a lot because of this movement. I saw this imbalance here, and I saw this the high of this candle here. So you can see how. Are you understanding what I'm saying? Please, if you're getting my point, just type on understood in the comment section. Understood. Right, just type understood. Because this topic is very, very deep. It's very, very deep. So, in summary, I don't want this call to be so long. In summary, price bounces from one liquidity area to the next, bounces from one liquidity area to the next. Whenever price takes a liquidity pool, expect price to reverse to the opposite direction. Now, if price takes out this liquidity, what do you expect? Price was be bullish towards to take out towards the upper end, right? The buy side liquidity, right? Market has taken out sell side. Market should go forward the buy side liquidity. And buy side liquidity could be previously high, it could be equal highs, it could be previous high, it could be anything. Remember, I've talked about liquidity here. Liquidity have various kinds. We have previous day high, we have London high, we have Asian high, we have all kinds of liquidity. So this is just a pictorial depiction of what I'm saying. It's not like it must be a high, right? It must not be a high. It can be a session high. It must not be like it must not be like this kind of high now. It doesn't be like this kind of overall high. It can be just a previous day high. That is all. That will be a drawn liquidity. So market bounces this way, up, down, up, down, up, down. So whenever market take a liquidity, expect to go to the opposite direction. When price comes to an imbalance, it's either it's rejecting from it or it was using the imbalance as was a magnet. So you can see how I bought here with hope that market should take out this candles high, which is what liquidity draw, and then what target was this imbalance, which was the liquidity draw. It's very simple. Just understand that market goes towards one liquidity point to the other. Look at how price took out this point. Look at this point here. As price took out this liquidity high, what do you expect? Price should go forward. The next liquidity point, which is what? This candle's low first. This candle low should be the first one. Why? Because price took out the high. Plus price took out the high of this candle, and then started rejected. What do you expect? It should go forward. Sell side. Market took out this candle's high, took out this high. What do you expect? Market should do what? Should go for this high, this low, because this is the candle range theory. When market take out the high of a candle, expect the low that candle to be taken out. Right? When it takes out the candles high and starts rejecting, note, when it takes the candles high and starts rejecting, not as it is, you are seeing big candles. When market takes out the high and it starts rejecting, like that's a series of rejections, what should you target? The low of the candle as your next liquidity draw. It's very simple. You can see how price took out this high. What do you expect? Was the low of the candle towards. You can see how price took out was the low of this candle. What do you expect? And you can see it's rejecting from here. What do you expect? It was the height we were taking out. This is how you draw from your daily bias. Very, very simple. Liquidity, imbalance, and all of those fun stuff, right? So you can see how price took out our high. What should I get? The low, and then overall was this low here. So this will actually be my first target. This first low, my first target. Yeah. Remember this. Up, down, up, down. That's how price moves. So this will become what? Your daily bias to bias to sell what to the downside. That is as easy as that. So use this to know where price should go for. All right, very simple. You can see this one as well. You can see how price came to this imbalance here, and it failed to break through, right? So what do you see here? Price came to this imbalance, and it failed to do what? To break through. What do you expect? This liquidity will be the target, right? Price is acting as this imbalance is acting as a resistance to price. Price cannot go lower than this. So as that price is rejected from here, what should you expect? She was buy towards this overall this liquidity high here, and that's the next target. And if you watch very carefully, price took out the low of this candle. This candle's low was taken very tinily, just very briefly. Took out the low of the candle. And what do you expect? The high. Okay, didn't take it out. It didn't. This liquidity draw. When the market is in an imbalance and it's acting as a resistance, it should do what? Should send price up to take out was liquidity to the upside. So you can see this high here. You can see this high here. And got all these lows were taken. The low of this candle was taken out. The low of this candle was taken out. You can see those highs will become what? Targets. Remember what I told you guys. Remember again. From low to high, low to high. How market moves for liquidity points. You can see how market took out this low. What should you expect? The high of this candle, high of this candle, and then the high of this candle. So if you ask me, my target would have been here because the low of this candle was taken out as well. So for buying your targeting was this high, and then with that high. Very simple. No too much talk. Right. So now what do you expect for this week? So obviously our next target will be here. Because why? We are coming from this imbalance here. I have taken out what the high of this candle. Yeah. So you can see how we have taken out the high of this candle. So obviously the low should be the next target. So price should do what? To come for the low of this candle as well. And you can see again, this is real time. You can see market is open, candle is printed. This is not replay 2. This is live market. Market should come for this because why? We have taken the high of this candle and we tap into this imbalance. And if you look very carefully, we also have what? Some imbalance inside there as well. We have this imbalance inside there. We have another imbalance here. So I have 2 imbalances here. So price has tapped into this imbalances. So this low should be what? Our next target. So you can sell to this low if you're able to get in on time. So that's where we end this call. If you want to join our paid mentorship, you can send me a DM because that is where I have time to mentor people personally. Right? As you guys on the YouTube now, if you have a question, I may not be able to attend to it because I'm not obligated to do that. Right? But when you're in a paid group, I can talk to you, hold you by your hands, discuss personally with you. You join my live private classes. You have access to my support group. Everything is done privately. Me and you, we are holding your hands and you're learning from it directly, right? It's not like YouTube where you just watch videos and then if you have something you're not clear, if you cannot contact me. But in the pay group, you can send a question to our group. Either I answer or one of my older students to answer. I have a lot of students that can answer that they're seasoned traders. I have students that have trained for like 2 years that in the paid group. So you can always relate with them. They will teach you. I have students from 2021, right? I have some 2021 students. So imagine being in a group here, my 2021 students they're very good, I tell you. They're very, very good. So it's either I answer your question or they answer your questions for you. They are very, very good as well. So if you want to join our payment mentorship group, do want to use the link in the description and use the promo code June for what? A 20% discount. And this discount ends on the by the end of this month. So our payment actually was 50,000 naira. If you want to join us for 1 year, right? You use the promo code June to get started was 40,000 naira, right? So if you want to join us, use the link in the description, right? So you're getting it. This will be the fee, not 50,000. So this is the promo code June, or send me a DM. Right? You can either send me a DM or use what the promo code June on our link to get access to what me and our payment for 1 year, right? Remember, it's for 1 year, right? It's annual payments. It's 1 year. So if you're not in Nigeria, you can also send me a DM for crypto payments, right? Just contact me through my Telegram group. You see my handle, my Telegram channel there. So just join my Telegram and you can contact me from Telegram. That's how you can get me, right? Telegram, you can contact me through Telegram, right? This will end this call. So if you want to join our pay group, use the link in the description. I so I can guide you, hold you by your hand, teach you personally, right? On this free mentorship YouTube, I can't hold you by the hand, right? You got about 2,000 subscribers here, so I can't attend to all of you at once. So if you want to join me personally, use the link in the description to join us, right? So have a wonderful day. Cheers and God bless.